Thank you for joining us for this episode of Legal Angle with Emmanuel Olawale. I have with me today a friend, Felix Quachey, an insurance agent. He's going to be talking to us today about getting insurance, things to look out for, and how to protect yourself. Welcome to the show, Felix.
Thank you, Manuel. Thanks for having me.
Yeah. Can you please tell the audience a bit about yourself?
Sure. My name is Felix Quachey, as you said. I am an insurance agent with American Family Insurance. My agency is located on Morse Road, although I've been working remotely from home since COVID struck. Um, I've been, well, this is my 11th year as an insurance agent, and uh, our office handles all insurance policies. So, be it personal, commercial, as well as life insurance, we do that. Another thing that we do that most folks don't think about is bonds. So, we do handle some bonding as well. So, um, yeah, that's what we do.
There are people that are listening or watching out there who, maybe they're wondering, how can I become an insurance agent? What are those hoops or those things that you need before you can be a licensed insurance agent?
That's a good question. So obviously, you have to get licensed with the state, and there are a number of accredited uh, institutions here in Columbus and all over the state where you have to study for the exam that is proctored through these schools, and then once you get the passing grade. 70 is still the passing grade. It's several hundred questions you have to take on the test, and you have to get at least a 70 passing grade. Um, Once you've done that, the state issues a license, and then the company that hires you appoints you as their agent. So those are the two pieces. You have to get licensed, then you have to get appointed by a company who is going to be interested in bringing you on. So that's the licensing piece. Once that's done, it's not all roses. It's hard work getting your name out there, getting people to know you for hook your name up with insurance and connect you with insurance, and it takes some time to build that, and it's constant repetitive effort in order to get that done. Of course, you want to make sure you're treating people very well along the way, and that way they they're it's easier for them to refer you to somebody else, even if that person isn't looking for insurance, but they're so wowed by how you took care of them, they go tell somebody else, hey, go talk to this guy. It's a slow drip, but it's very rewarding. I mean, like I said, we're 11 years in now, and it's not easier yet, but it's not as tough as it was. So yeah, that's how you do it.
Okay. Is there any kind of academic background that you need to have, or maybe you need a degree or whatnot?
Personally, I have a degree in finance and an MBA. So that's not necessarily required. I would say that my educational background made somewhat easier because the language of insurance and studying for those tests, it was not necessarily Greek to me because I kind of had that background anyway. But if you finish high school, and you're willing to work hard, you can make a career out of insurance, because after all, even after you are licensed, the state requires you to maintain your license by taking courses to continue education to keep you sharp and be on the cutting edge of what's happening in the industry and so on and so forth. So yeah, you don't need a college degree by a long shot. It'll help for yourself personally, for your own personal development, but there's plenty you can do after your license that can keep you going.
Thank you. And there are people out there who think that maybe buying insurance is just like buying a plane ticket. That, you know what, I can go online, put in what I need, and get it directly from the insurance company, just the same
Right,
way you can buy a plane ticket through the airline.
right,
Well,
right.
what do you say to people like that who think they don't need an agent?
Well, interestingly, I just had this conversation yesterday with a client, and I was explaining to them that unfortunately, over the years, so many insurance companies have use their advertising dollars to make it appear as if you don't need a professional to educate you on what you're doing when you're purchasing insurance. And the example that I use a lot of the time is if a doctor tells you, hey, this is the procedure that you need to do, you don't then go online and say, hey, let me go investigate this procedure and do it myself. There's no way you're going to do that. Why? Because you do not have the body of knowledge and experience that that doctor has in order to be able to successfully take care of yourself. The same thing applies with insurance. Insurance is a significant financial decision in terms of what the impact of an accident, for example, if we're talking about car insurance, is going to have on your personal finances. So if your insurance that you're purchasing that you did yourself online without any professional, backing, somebody to educate you and advise you, you can find yourself with so many gaps in your coverage that now you have to come out of pocket for thousands of dollars to pay for coverage you did not get because you didn't have the professional advice that you needed in order to make sure you were properly covered. So, um, um, what I tell folks is if you're an adult, 18 and over, purchasing and paying for insurance on your own, it is important that you have a relationship with a local agent who you trust to give you advice about the policies you're purchasing. And there's so many real world impacts behind those numbers on the paper, and you need to understand what each one of those lines mean so you don't chuck money and not know what you're doing, and then you're not going to find out till you're in trouble how it really works, and that's the wrong time to be trying to review how your coverage really works. So doing it on the front end with a professional is very, very, very important.
Oh, thank you. Now let's talk about auto insurance. What are those things to consider when you want to get an auto insurance?
Yeah. What I tell folks is when you're purchasing car insurance, um, the advice I give all my clients: purchase the highest limits of liability that you're comfortable paying for each month. Because as much as I'd like for everybody to have the largest possible liability limits, the reality is one's budget isn't infinite, right? So that's why I say, look, pay for the highest limits you're comfortable paying for each month, because even when you purchase state minimum liability limits, when you go on the Ohio Department of Insurance website, there's a whole section over there that says, hey, these are our state minimum limits. However, these limits are not adequate to take care of some losses you might find yourself at fault for. So even they themselves encourage you to purchase more than state minimum coverage, which is why I always tell people, look at your limits of liability. Whether your coverage is full coverage or liability only, it doesn't matter. Nobody cares whether you have full coverage or not. This is what I tell people all the time. The most important part of your policy are your liability limits, because think of it like a savings account. When you find yourself in trouble, do you want small amounts of money in your savings account to bail you out, or would you prefer larger amounts of money in your savings account to bail you out? So when you're paying your insurance premium, I tell people, think of it as making contributions to a savings account that's going to bail you out when you're at fault for an accident, or sometimes it might not even be your fault. Somebody else hits you, they take off, now you're injured, and those hospital bills are not going anywhere. They're on you now. So you want to make sure your uninsured and underinsured limits are also high enough to take care of paying those bills as they come. So yeah, that's the common advice I give folks: buy the highest limits you're comfortable paying for each month. And that's across the board. Every single line of coverage, all the way down the list, go for the highest limits you're comfortable paying for each month. And that's a good way to kind of get yourself out of trouble should you find yourself in there.
Thank you. And what's the current state minimum?
The current state minimum, believe it or not, when I first started in insurance 11 years ago, Ohio's state minimum coverage was $12,500 per person for bodily injury. Uh, I believe it was 25,000 per occurrence for bodily injury, and $7,500, I believe, for property damage, which what can you fix for $7,500 nowadays? So some years on, it got bumped up to the current limits, which are 25,000 per person for bodily injury, 50,000 per occurrence, and 25,000 for property damage. And the next question I mostly ask folks is, has anyone ever explained to you what those numbers mean?
That was the question I was going to ask you next.
And every single car insurance sale, every single car insurance policy we write in our office, we ask that question. We don't assume that people know what they're doing. It's our job. We have a fiduciary obligation as insurance professionals to educate folks so that when they're paying for it, they know what they're paying for. So when it says $25,000 is your per person limit, that's not saying that every single person that you injured, because that top line means that this is money that we have in your policy to help you pay for damage you've done to somebody else. That's the liability part. As a lawyer, you know you're liable for you owe somebody else something, right? So your liability limits help you cover the damage you've done to somebody else. And the big word there is limit. So full coverage doesn't mean anything. So when it says you have a 25,000 per person bodily injury limit, that means that if you hit me and I'm injured and I go to the hospital, the maximum the policy is going to pay for my medical bills is up to $25,000. After that, if there's more money left to be paid, that's why Ohio calls it financial responsibility law. It becomes your personal financial responsibility to pay the difference. The per occurrence limit means any one accident. So let's say in one accident, you hit my car runs into Emmanuel's car hits the next person on the road, somebody hits the next car. Each car has multiple individuals in it. They all get injured, they go to the hospital. Now here's the scary part. That $50,000, that's the maximum the insurance company is contracted to pay for all injured individuals. That's the maximum. All those folks have to share that $50,000 pot to pay their medical bills. Okay. And then the property damage piece takes care of the cars that are damaged that you hit, an electric pole maybe that somebody may have run into. But because your car was the one that started the accident, your policy is responsible for paying all of that. So, state minimum $25,000 property damage limit, it's not going to do much. Call AAP. Ask them how much one of those electric poles cost up and down all these streets you drive around in Columbus. On average, you're looking at about $20,000 for one of those wooden electric poles because it's high grade lumber and it's treated so it can withstand the elements and bugs and so on and so forth. Then they're going to also charge you for the overtime. They bring a crew out and the wiring and stuff that they have to replace. $25,000 on a state minimum liability limit policy. You hit somebody's electric pole and somebody's nice Mercedes at Easton, you're coming out of pocket for the rest. So that's how that works. Emmanuel,
Thank you.
coverage that a lot of folks take for granted is medical expense coverage in their policy. So, for example, you hit somebody, they're injured to go to the hospital, but you also get injured in that accident. Okay. How does your medical bills get taken care of? Yes, you have health insurance, but we all know health insurance doesn't pay for everything nowadays. So if there's a difference in costs that you have to pay, your medical expense coverage in your car insurance policy becomes very, very, very important. And this is one coverage that over the years, we know for a fact, so many insurance consumers neglect this coverage. And sadly, too many agents don't take it in, seriously enough to explain to folks, hey, look, you want to pay attention to this coverage, max it out. On average, most people that we're converting from other clients to come, other insurance companies to come to our office that we're taking care of who have become our clients, on average, we're seeing them carrying only $1,000 or at best $5,000 of medical expense coverage. That wouldn't even pay for an ambulance ride. So that coverage is very important. I always tell folks when it comes to that particular coverage, medical expense coverage, always carry the highest limit that your company offers. And that also helps you out in the end.
Thank you. And there's always this misunderstanding between having a comprehensive insurance and having a full coverage and having collision coverage. I
Right,
see that a lot with some of my clients.
right.
So, can you explain the difference between having comprehensive
Yes.
full coverage and having
Yep.
collision coverage?
Over the years, the term that I have always hated as an insurance professional is the term full coverage. I cannot stand that term to save my life. So, what makes a policy quote full coverage is the fact that you have a combination of two coverages: collision and comprehensive coverage. Okay, so when you have those two coverages combined, that's when you can consider your car insurance policy full coverage or liability only. Okay, comprehensive coverage, one way to think about it is everything that you as a driver cannot control, as you're driving, which causes an accident. So for example, you're making it down in 315 over here in Worthington, and a deer jumps out and you hit the deer. Well, that's a comprehensive loss. It's not like, how do you can't control that, right? However, if you are to assume control of the vehicle and try to avoid the deer and you happen to hit another car, that's no longer a comprehensive loss. It's now a collision loss. Okay. So collisions are where you as a driver have control of the vehicle, you know, maybe even if you lose control and hit a tree, that's still collision. Okay. You hit the back of somebody at a light, that's a collision loss. Your car's parked outside and in a thunderstorm, a tree branch falls on it, comprehensive. Flood damage to your car, comprehensive. Um, so that's how it works. So it's very important when you're going to hit a deer, don't try swerving all over the place. Tell everybody in the car to brace themselves and hit the deer well enough to total your car. It's better that way. Okay.
As long as you don't
Um,
lose your life.
yeah, well, hopefully you don't lose your life, but it's better to hit the deer from an insurance standpoint, in terms of what impact it has on your rates down the road. Comprehensive losses are treated a little bit kinder on the claim side as far as future impact on your rates than collision claims are. So that's a big thing to know. So that's hopefully folks kind of are able to make the distinction between comprehensive and collision and full coverage. Now, keep in mind, if your policy is the one that is taking care of the repairs to your vehicle, you have to go in your pocket and pay the deductible associated with either your comprehensive or collision coverage. Okay. So, you have a lot of folks where, you're driving down the road, some other person comes out of nowhere and hits you. And rather than calling that person's insurance company, you call your insurance company to file a claim. Well, that's a mistake. You always want to call the guilty party's insurance company and file a claim there. Okay. This way, that person's property damage money that's in their policy pays to fix your car. Whereas if you call your insurance company to say, hey, can you fix my car? They're going to say, of course, we're going to fix your car. You have collision coverage, but your collision coverage comes with a deductible, which is your part of the cost of fixing your car. Okay. So
Yeah.
that's how it works.
Yeah. Another thing that I've noticed with that analogy is that sometimes when you get involved in an accident and you call your insurance company, they're more responsive to you because you are their customer. On the other end, if you call the other party's insurance company, they might, sometimes it takes a week, two or more. They'll probably say they're investigating, and most people need their cars to be fixed. In a
Right.
situation like that, and maybe you can afford the deductible,
Right.
is it advisable to do that?
And you can you can do that, and then your insurance company goes through a process called subrogation,
Subrogation.
and
Hmm.
they try to get the money that they pay to fix your car back, as well as try to retrieve the deductible that you paid. Okay. However, before you call your insurance company, simple thing to keep in mind: the squeaky wheel gets the grease. Okay. If you call that other insurance company and you've made a claim there, on average, within every 3 days, if you're not hearing something from somebody at that insurance company, you should be calling. You need to be proactive and calling and saying, "Hey, I filed a claim X, Y, and Z date." If your car is drivable, your situation is not too bad. But if your car is not drivable, you definitely want to be insisting on that very first call that they're setting you up with a rental and so on and so forth. That way, you're not without transportation and not inconvenienced. And then once you have a rental, they're very motivated to make sure that everything moves along quickly because they don't want to have to keep paying the cost of that rental for longer than they should. Yes. So it's important. Squeaky wheel gets the grease. Call all the time. Um, if you're told, hey, somebody will be calling you within 24 to 48 hours, after the 24 hours you haven't heard back, you're given a number and a claim number to call back, do that. And that's how you avoid having to spend out of pocket monies to, take care of your vehicle. Okay.
Thank you. And a lot of people out there, even though they get insurance, or some that haven't even bought an insurance before, what does the word deductible means?
Deductible is okay. So here's a way to think about it. After all, the car is your personal property, right? It doesn't belong to the insurance company. That's your car. So a deductible is kind of a way for you to have some vested financial interest in the upkeep of your vehicle. Okay. So, case in point, and mind you, you can have a deductible as low as some companies will give you on collision deductibles as low as $100, and on comprehensive deductibles as low as zero. Of course, the lower your deductible is, the higher your monthly insurance premium is. And typically, the higher your deductible is, conversely, the lower your monthly insurance premium is. So it's a question of what's comfortable to you. I'm a big fan of having as little out of pocket cost after an accident as possible. That's what I try to coach my clients to do. So if you're able to carry a lower deductible, by all means do that. And most times the difference in premium is not that great. But this is why it's important to have a professional advising you versus going on insurance.com and buying a policy and never talking to somebody, and then you find yourself in a jam, and then you have $1,000 deductible and you're going, oh my god, how am I supposed to do this? So yeah, that's why.
Yeah. Is the year, make, and model of the car important when trying to get
uh,
insurance?
yes. Okay, so generally, uh, if you have liability only insurance, which liability only means that you don't have comprehensive, you don't have collision, the insurance only pays to fix the other person's car that you hit, and then it's your own responsibility to fix your car. So if that's the type of coverage you have, then it's not going to make too much of an impact the type of vehicle you're driving one way or the other. On the full coverage side, it plays a really really big part because the cost of repair of the type of vehicle that you're driving has an impact on what your premium is going to be for that collision piece. So, definitely newer car, higher premiums. Older car, typically lower premiums. Why? Parts are cheaper, not so advanced technologies in them, so on and so forth. These new cars that have all these bells and whistles cost an arm and a leg to repair. So, that's part of the reason why car insurance premiums haven't leveled out as much as folks would like.
Okay. What about the age of the driver?
Definitely. Um, so on average, if you have a driver with 3 years of driving experience, that's a good thing. So many parents watching this today will be going, "Oh my goodness, I know the pinch of having teenage drivers getting on my policy, and suddenly my rate skyrockets." I get it. The age of a driver makes a big, big, big difference. And to a certain degree, the perspective of the insurance company is this: you know, the accident data out there shows that the majority of accidents are caused by drivers between ages 18 and 25. Well, they got to pay for it somehow, right? So, it's simple supply and demand type deal. And unfortunately, those teenagers put a lot of upward pressure on on um, on your premiums. But time is your friend when it comes to teenage drivers, and take advantage of good student discounts. Take advantage of I know American Family offers also a time away discount. So if you have especially a college student in your house, maybe they're a college freshman, uh, they won't be taking their car to school. There's a big discount you're able to get because that car is not going to school with them; it stays home. So if they're on campus, they're not driving, so you get a rate break that way. So there's myriad discounts out there. We have a Know Your Drive program as well as a Teen Safe Driver program. So yeah, always check with your insurance company to see which specific youthful driver discounts are available to kind of mitigate that high cost of insuring your teenager.
Thank you. How about the driving record?
Definitely. Every how do you say, insurance is about risk, right? And minimizing risk. So if you're a driver, you want to be the lowest possible risk you can be in order to get the best possible rate, right? So if you're getting tickets and you're getting into accidents, well, your rate's not going to be great. It's going to be high. But if you are squeaky clean, no tickets, no accidents, especially over a 5 year period, because majority of companies now are assessing driver and claims records of each client over a 5 year period, increasingly so. Drivers that have a squeaky clean driving record over such period of time tend to get a better rate than their counterparts who have, numerous tickets and, accidents and so on and so forth.
Okay. What's the advantage of getting all your policies, let's say home insurance, business insurance, and car insurance through the
Through
same
the same company.
insurance company? Yeah.
It's massive. Bundling, as we call it, is very, very important because one of the biggest discounts you're going to get on your car insurance is the home and auto discount. And one of the biggest discounts you're going to get on your homeowner's insurance is the home and auto discount. So, out the gate, if your car and your homeowner's insurance is with a particular company, you're looking at 20 to 25% off already, with on average. Okay. So it's an important discount to have. And the more you deepen your relationship with that insurance company, the better your discounts also become. So, let's say with the same company you have car insurance, you have homeowners insurance, you now have some life insurance. Those things all play a part in reducing your premiums, so it's important. Yeah, again, goes back to the point I was making. If you have a local agent that you trust and build a relationship with, and they're doing work for you, then you do your best to stay in the same place. And that's the other thing. Why does my rate change all the time? It goes up, it goes down, it does this, it does this. Well, um, I- the example I ask people all the time: when you go to Kroger to buy a gallon of milk every single week, the price is never the same. I mean, the price is never the same. Sometimes you go in, the cost of milk is super low. Sometimes you go in, it's kind of middle of the way. Sometimes it's high. I've never gone to buy milk and had the price be the same anytime. Nobody stands up at the front gate at the cashier and queries the cashier, "Hey man, what's going on with the price of milk?" Because they understand that when the cost of feed goes up for these dairy farmers, it impacts the cost of the end product, right? When gas prices go up, it impacts the end product. So it's the same way with insurance. Yes, you may have the best driving record on the planet. However, inside of your insurance company, all those other drivers and the things they do affect what happens to everybody's rate. So if you have an insurance company and it says mutual company, so you know if they have mutual in their name, then it means that we're all collectively responsible as clients for what happens to the rate. So, on average, rates are set on a 7 year assumption for car insurance. We assume the average driver is going to be accident free in 7 year chunks. If you end up getting an accident today, Emmanuel, that means that the rest of us drivers in this company have to be accident free for 14 years to keep the rate level. So now you take that example and pull it over millions of drivers that we insure, and that kind of relationship has a lot of up down impact on the rates. However, here recently, the biggest thing affecting car insurance premiums is how expensive these newer vehicles have become to repair. So that's also a consideration that a lot of consumers don't necessarily think about. But yes, on average, car accidents are down, but the cost of repairing these vehicles have skyrocketed, and that's something that insurance companies in general weren't quite prepared for. So you project X for losses during a certain period, and then when the actual numbers come back, it's blown the projection all way out of the water. There's no way to recoup that difference other than asking everybody to chip in a little extra, and that's basically what's going on,
Yeah. Wow. No, there's so much to talk about, but we
man.
are out of time. Thank you so much, Felix, for coming on Legal Angle with Emmanuel de la Halawale. I hope to bring you back because there's still so much to talk about. I hope you
Definitely.
honor that invitation.
I definitely would. And I would sign off by saying life insurance is the most important work that we do in our agency. If you do not have life insurance, I know we weren't able to cover that subject today. Call me. My number is on the screen. Take care of it. It's the most important work you can do. Okay.
Thank you. And stay tuned because I'm bringing on another guest in a few minutes. Thank you.
Thank you, everybody.